don't listen to everybody out there saying go as big as possible. I say think big and start small. And I've been proven, and I feel like a champ saying that. It's not a sales technique. You're not going to sell a lot of education and mentorship programs that way, but it's the reality.
That first deal or the first couple years, maybe you could give an example of one of the deals you did, whether that's a, knock it out of the park or a kick yourself in the teeth type of deal.
What I would say is for Jake and I, we did it sort of backwards. Our first 1,000 units were only bought by me, Jake, and a partner, Mike. We were able to refinance over $9 million of our proceeds, and we didn't go on vacations. We reinvested into the business. We kept buying assets with it. We kept buying underperforming assets. Distressed. They call them value add now. They were distressed basically. So they're back to distress now.
Penny stocks are high yield, distress. Yeah.
Yes. So, we would buy them with low NOIs. We knew what rents were. We knew how to run these properties because we had our property management company. We'd buy the assets with community banking, which community banking is coming back now. We'd refi them to community bank once, and then to agency the second time. We did that 5 or 6 times. We were able to refi money out, go from recourse debt to non-recourse debt, and we just kept repurposing it. There came a point where I'm like, Jake, this syndication sounds like a great tool in the toolbox. It's only a tool in the toolbox. Owner financing is a tool in the toolbox. Buying yourself is a tool in the toolbox. JVing is a tool in the toolbox. And syndication for the last 4 or 5 years has been an amazing tool in the toolbox. Right now, I'm not so sure if you've got to, raise 12 months of debt service, that may crush syndication for a little while, but you have to learn it. And the way I learned it was this: the podcasting syndicators, having about 15 of them on my show, listening to their different strategies. And then ultimately what we ended up doing was the first syndication we did was a small deal for us. We were able to buy it internally. It was only a $6 million deal. If we couldn't raise the money, we would have been able to buy it ourselves. But like I said, commit, figure it out, and don't listen to everybody out there saying go as big as possible. I say think big and start small. And I've been proven, and I feel like a champ saying that. It's not a sales technique. You're not going to sell a lot of education and mentorship programs that way, but it's the reality. The reality is you want to get into a space. We started out with a 25 unit property, our very first property. It was comfortable for us. We could manage it. We got owner financing. It wasn't overwhelming. If I had started out with 100 units, I probably would never be talking to you right now because I probably would never start. So for us, the 25
and we couldn't afford it.
Well, yeah, that's the truth, right? But
there is that.
That's definitely true. But I still think that mental block of getting in 100 units was just so daunting for me. Even if I did have the capital, I wouldn't know how to do it. So the first deal was a 25 unit property. We affectionately called it Courtyard Cottages, aka the crack den, because it was just not a really great property. But what we liked about it was a lot of value adds. It was $600,000. We got 10% owner financing. So we only needed to come up with 10% of the down payment, which came out to $82,000, $60,000 plus closing costs.
So sorry, the $600,000 or $6 million you said?
No, $600,000.
So
okay. I'm sorry. So the first syndication we did back in November of 2018, that was our very first syndication, was a $6 million deal.
Oh, okay.
I want to go back to our very first deal, just to have people understand. Even in our first syndication, we started small. We thought really big, 20, but we started with something where we can consume. And if we did make mistakes, we could pivot. Because on this first deal, weekly renters. So it was just a tough tenant base. We had to get them to monthly renters. We had a lot of expenses. We had to get the expenses off the balance sheet as far as paying for electricity, paying for, basic utilities and cable. The other problem with the property was there was no systems. It was a mom and pop. So for us, septic field, 6 months after we took over, it went out. So for me, thinking about syndication and raising money got to be really scary because I'm like, you know what, Jake, if we don't get paid for the next 3 months, it's okay. Investors don't know if they're going to take that news too well. We'll see what happens. So for us, starting at that small level, it was comfortable for us. We took our lumps, but then 3 months, we already had a general understanding of it, and we closed on the next deal 3 months after the first one. So,
yeah, and Jesse, that first deal pays like $6,000 a month. Every month, it's a 25 unit.
That's insane.
It's beautiful. It's got all metal roofs on it now. It's just, it's primed up. And then, you were asking about some other deals too. And the one that I'd like to highlight, I think it was our fifth deal. It was 281 units, and it was a fully owner finance deal. I mean, not in the sense that they held the entire note, but they held our full down payment. So we actually got money back at closing. And right now, or prior to Corona, we'll see how this month goes. But we were averaging $250 per unit per month. Like we were crushing Q1 in terms of. the profit per unit. We have these Excel sheets that that we're working on or whatever, and that we calculate our draws, and we call it PPU. It's like profit per unit that we look at, and this property's just been phenomenal. We were able to refi it out, pay the owners back, and this was 2015 we bought it, and we were able to take out money on top of it, and the thing has just been crushing it. So we got owner financing on it, didn't put anything into it, actually got money back at closing, and the thing is just a beast. So I mean, people say, oh, that's not possible, you can't do that. Yeah, if that's what you believe, but if you really are out there working with brokers constantly, and we didn't go into it, so I don't suggest that people go in and say, hey, would you consider owner financing on this? No, you start to evaluate the deal, underwrite the deal, get to know them, and then they kind of brought it up to us. And so it's when you listen, these opportunities can come forward. So I hope we do another one, in the future. There's nothing wrong with owner financing. I love it.
And Jake, to piggyback off that, it's really important. One of our coaches we had a call with yesterday, his name is Bill Ham. He did a weekly lesson for us. He uses this acronym, which is really appropriate for everybody. Listen to this acronym because you can use this for seller financing.
I'll write it down.
It's called SPY, S-P-Y. The first one is the seller. You always have to worry about what the seller wants on this deal. You can't think of what you want. The next one is the property. What does the property have? What does the property contain? What are the elements of the property? And finally, ultimately, it's why. It's you. So when you're thinking of owner financing, you don't go in saying, I want owner finance. You have to see if it's a motivated mom and pop seller. So the seller is the first element. And how can you solve this problem? Well, Mr. Owner, what are you going to be doing with that money? Well, I'm putting it in the bank. Well, hey, how about taking a note and I can give you a much higher interest rate, much higher rate of return? Mr. Seller, you worried about paying some capital gains? We can defer some of those capital gains. You need to know what the seller has. You need to focus on what their problem is. So always think of this, guys. Write it down. SPY, seller, property, and you. And I want to give a big shout out to Bill Ham because that was enlightening to me. It was always hard to try to, express it to students and to community members like what you need to be focusing on. But it's always about solving problems from the seller. And there's going to be a lot of problems coming down the pipe now. Yeah. That's why Jake's talking about seller financing because that's going to be.
Don't lead with it though. Don't lead with it. Build rapport on the front end. Okay, you are still the salesperson. The broker is not the salesperson. You are the salesperson. You have to let them know that you're qualified. You have to prove that you're qualified. And they have to be able to communicate that with the owner. And you don't do that by saying, hey, you want to hold some paper?